Hello everyone, welcome to Betty Academy. Our job is to make school easier, and today in this lesson we are going to learn about qualitative characteristics of useful financial information. If this is the kind of videos that you'd like to watch in future, kindly like, share, subscribe, and don't forget to comment down below. So for financial information to be of any use to investors, creditors, and other stakeholders must exhibit certain required and desired attributes. These attributes are called qualitative characteristics of useful financial information. Qualitative characteristics of useful financial information are categorized into fundamental qualitative characteristics and enhancing qualitative characteristics. So for the first two, which is we have relevance and faithful representations, those are fundamental qualitative characteristics. The other three, from the comparability all the way to understandability, those ones are enhancing qualitative characteristics. Fundamental qualitative characteristics are those whose absence makes financial information no longer useful. Relevance and faithful representation are the fundamental qualitative characteristics. When you look at the first one, which is relevance, relevance gives financial information the capability of making a difference in decisions made by users. Such capability arises when the information has either predictive value, confirmatory value, or both. Relevance is applicable in the context of materiality. Materiality is the quality of financial information which makes its omission or misstatement significant enough to impact the decisions that users make through reliance on the information. Materiality acts as a filter on relevant information such that relevant information is useful when it is material. The other point is faithful representation, which is the second point. So the other fundamental qualitative characteristic, faithful representation is achieved when information truthfully represents the underlying economics of a phenomena. This is achieved when information is complete. When it is complete, it is neutral. By neutral, it means that the information is without any understatement or overstatement, bias, and free from errors. Yeah, that one is achieved at least in the process used to produce the information. It has to be free from errors. Now we go to the enhancing qualitative characteristics, which it's represented by the third point all the way to the sixth point. So we have this one under enhancing qualitative characteristic. We have enhancing qualitative characteristics improve usefulness of financial information. However, neither do they compensate for lack of relevance or faithful presentation, nor their absence make the information useless. They help decide between two equally relevant and true and faithful accounting choices for a single transaction. So, preparers of financial information must achieve to maximum enhancing qualitative characteristics. Enhancing qualitative characteristics include comparability, verifiability, timeliness, understandability. So under comparability, which happens to be our first point under enhancing qualitative characteristics, requires financial information to be comparable across periods and companies. So comparability is achieved through consistency. So when you're preparing financial information, the financial statements and all that, it has to be consistent in terms of the policies and the procedures that you are using. It has to be consistent, and again, for you to be able to compare well, also in terms of the periods, the financial periods that you are preparing the financial information, if you are doing it on quarterly basis, let it be on quarterly basis. You don't mix up information such that you have others are on they have been done annually, and you're trying to compare the report from the ones prepared on annual basis together with the ones on quarterly basis. If it is quarterly, it has to be quarterly. And if you are doing it annually and your financial period starts from January to December, let it be from January to December across all periods, such that you should be able to know if the performance of the farm is decreasing over the years or it is increasing over the years. And you should be able to know what are the triggers, what happened in a particular financial year, so that the reported earnings, probably they were high or low. And again, the other thing that you need to do, it has, for you to be able to compare the financial information, there are those guidelines that have to be followed, so that you should be able to compare between farm A, farm B, farm C in the same industry. The other point is about verifiability. That happens to be our fourth point. So verifiability is the property which enables different knowledgeable users to agree that particular financial information exhibits truthful representation. It improves usefulness of financial statements because it assures users that they are indeed true and fair. So at any single time, you have it has to be verifiable. Timeliness is the other point. Timeliness is achieved when financial information is made available early enough for it to impact decisions made by the users. If a user has to make a decision, you do not rely on information that was made to the that was you don't rely on information that probably was updated 2 years ago. It has to be very timely. At that particular point, it has to be up to date. The last point, which is understandability, requires financial information to be classified, characterized, and presented such that it can be understood by users with reasonable knowledge of business and economic activities. You remember, this financial information, we have the users of financial information, both internal and external users. And for an investor, they only have basic knowledge, or rather reasonable knowledge, about business and the economic activities. So it has to be presented in a manner that it can be easily be understood by any user of the financial information. So that's the end of the lesson. Kindly watch for our next video. Bye.